Vice-Chancellor, dear colleagues, dear friends, on behalf of the University, welcome. It is my pleasure to introduce to you the Baroness Morris of Bolton, Doctor of Law, Doctor of Philosophy of this University. Lady Morris is the Chairman of the Center for Islamic Finance and the first Chancellor in the history of our University. Lady Morris, the floor is yours.
Thank you very much, Aris. I always feel very clever when I'm here. Can I extend a very warm welcome to everyone this evening to this, the fourth lecture in a series of lectures hosted by the Centre for Islamic Finance at the University of Bolton. And my thanks to Professor Mohammed Abdul Haq, the director of the centre, for once again opening his amazing and enviable Black Book of Contacts. And a very sincere welcome to Mr. Paul Druckman, who sprang from those very pages. And I think I also need to thank Peter Semengo Turner. Peter, where are you? There you are, because I actually think that you first introduced Peter Paul to Mohammed, so thank you very much to you as well. As you will have read in the little brochure that you have in front of you, Paul is very well known in business, and the accounting profession is highly regarded worldwide, which is hardly surprising when you consider that not only is he the CEO of the International Integrated Reporting Council, but he's been president of the Institute of Chartered Accountants in England and Wales, a director of the UK Financial Reporting Council, and a member of the City Takeover Panel. And as well as all that, he managed to find time to chair and be a director of a number of companies. And before all of that, he was an entrepreneur. So I think he has a great deal to offer. He's also worked very closely with the Prince of Wales and chaired his Accounting for Stability Board. And last, but by no means least, we were delighted when Paul agreed to join the International Advisory Board of the Centre for Islamic Finance and therefore joined the family of the University of Bolton. I had the pleasure of having a cup of tea with Paul just before and tea cakes, just before he agreed to join the board. And he wanted to know exactly what we were doing at the centre, very much liked our philosophy that we were trying to make Islamic finance available to everybody, that it was mainstream, that people who study Islamic finance are very interested in lots of other things in the world, and people who are interested in lots of other things in the world should also be interested in Islamic finance. But he determined that he wasn't just going to be a name on a piece of paper, that he wanted to play an active role. And this is the very first role of Paul being active with the centre. He was also absolutely fascinating about his current role. And so I'm not going to take up any more of your time. I'm going to introduce Mr. Paul Druckman, and you will see just what a fascinating role he has. Paul, thank you.
Thank you very much. Just get my watch out so that I don't bore you all for too long. Let me, dropping that. Well, thank you very much for that kind introduction, and Vice Chancellor, Lady Morris, and distinguished guests and ladies and gentlemen. It's a great honour to be here, and I hope that by the end of my lecture today that I will have hopefully enlightened a few minds, and not closed too many, but I'll come to that as we continue. Can I begin by congratulating the Centre for its leadership in academic study in Islamic finance since 2012, and I just saw the brand new plaque in your centre, which looks wonderful. And just to reiterate, I met Mohammed around 2.5 years ago, soon after we'd established the International Integrated Reporting Council. I won't tell you how long ago it is that I met with Peter Semengo Turner, because it is when we were training to be chartered accountants, and that's a few decades ago. It's some of us it wears better than others, Peter, so I can see how fit and well you look. When I met Mohammed, I mean, the reason that Peter introduced me, because I was looking for some guidance and help around Islamic finance and the work that we were doing around value creation and what it meant in different countries and sectors, regions and nations. And I was really trying to understand how that might work and how you could embed different governance, accountability and other measures in a financial system that we here in the West, sitting here in the UK, tend to assume that it is our way and no other way. And that, in my experience, certainly in the last few years, is certainly completely incorrect. And as you said, Lady Morris, I'm delighted to be joining the International Advisory Board, and I hope that I can bring some insights and some contacts and other things to support the board going forward and the centre going forward. I promised myself, after sort of 30 or 40 years of watching, well, actually not that long, of watching PowerPoint slides, that not to have lots of bullets on my PowerPoint slides. So you'll see some pictures rather than some bullets. And what I wanted to represent here is to say, okay, we wake up every morning, and one of the things that we have dreams about what we want to do. And we thought about those dreams, and we move forward with those dreams. And you have two choices when you wake up in the morning. You can choose to continue with your dream, or you can decide to change your dream. And I would like to hope that at the end of this 30 or 40 minutes, that maybe I will have maybe not changed, but amended some of the dreams in the room today. Maybe that's ambitious, but we'll see. Because, in fact, we were talking about Albert Einstein only just a few minutes ago. But as Einstein said, we cannot solve our problems with the same thinking that we use to create them. And I think that it is time for some new thinking. And that's what I want to propose to you today. And let me start with a personal story, is that I was actually after qualifying as an accountant, I was a teacher and lecturer. And one of the things I did in those days, teachers and lecturers actually had the summer holidays off, to entertain themselves. And I was I was looking over here and thinking, gosh, what was that in those days? But I was asked to do a review of an accounting package in 1982. Now, those of you who remember 1981 was when the IBM PC came out. So it was very, very new in those days. So I did this review, and it was complete rubbish, this package that had been designed. And I thought there's a better way to do this. And I actually wrote a specification about how the accounting system should work. Sent it to this fledgling software house, and they said, that's rubbish, we're going to carry on with what we're doing. And I went to a firm of accountants that I knew at the time, and I said, you do realise that you're going to have every person in this office in time is going to have a PC on their desk. And at the time, it was a person I knew, and I wasn't the originator of this idea. It was just, new to the accounting profession in the UK. And as I was leaving the room, the gentleman put his arm around my shoulder and he said, it's nice to have dreamers, which is where this comes back to this dream. And over the next 20 years, I created a software company that produced accounting software. And thank goodness, over those years, we ended up with one per desk. Maybe it's one per shoulder, and it's too much for us today. But nonetheless, it's been an interesting journey. But it is, I hope, an illustration of how you can wake up and change what you're trying to do. Because if somebody said, myself looking back over my career, that I would be a software entrepreneur, I'd have said, don't be silly. I'm either going to, originally an accountant and then a teacher. But it shows what you can do. And I think it's important that we try to open our eyes. So let's just move on and think about capitalism. Okay, so we're in a capitalist society. So let's think about capitalism. And this is trying to demonstrate that it doesn't grow from the ground, a bit like the April Fool with spaghetti coming on off the trees. And actually, Lady Rothschild does a lot of work and has a centre for inclusive capitalism, which is very interesting. And so do many others. And I'd like to pick up on this concept of what many have described as inclusive capitalism, talking about changes. And I'd like to start talking about inclusive capitalism with the idea of system change. And again, I'm borrowing, not initiating, but I hope I'll bring together some of the thoughts. There's the chief economist of the Bank of England is a gentleman by the name of Andrew Haldane. And if you ever want to read somebody incredibly insightful and innovative, read his speeches, because they're one of the great sources, in my opinion, of what we see around the world today. And this is a quote from one of his latest speeches, where he says, ultimately, if we can change the structure of the system, the structure of incentives in banks and non-banks, that has got to be better for everyone. So it's not a matter of, and what he goes on to say is, it's not a matter of just tweaking, but changing the underlying system. Because we have a system today which is, a massive discontinuity of the business models and the way that the capital markets operate than we have traditionally. And yet our system of governance, accountability, and recognizing good is still in a business model and an environment that is many decades old. If you think about it, who would have thought, when you have this huge discussions about obesity in Europe and especially in the US, that an organization like Weight Watchers, their share prices dived all because of a little bit of plastic with a Fitbit sitting around somebody's wrist. And we can describe all sorts of other disruptive innovations that are happening in today's capital market system, which makes it very different to the capital market system that we've traditionally got used to. And I'd like to try to accentuate that actually by some more thinking of Andy Haldane, where he says that and I challenge you on this, is the day of the limited liability company gone? Should we actually have limited liability? Because with limited liability comes a certain security for those within the bubble to not be responsible outside of the bubble. And to illustrate that, if you bear with me, I want to equate a company with a human being. So let's look at the anatomy of a person and try and understand what that looks like as a company. So the employees are the lifeblood of an organization, flows through making things happen within the body. If you then say, how is the blood managed? Well, it's managed through the heart, which pumps the blood around when it's needed. And that could be described as the management of the organization. The strategy is the brain. What are you going to do next? Why are you doing it? Looking forward. The culture of a business or an organization is the DNA, what is deep within you. And the leadership and continued entrepreneurial energy of a company is really its soul and its spirit driving forward, just like Muhammad does in his various guises. And then the boring bits, the governance and the accountability of a company, which is the bits I've predominantly been involved with over the years. But, they may seem boring, but they are the rhythms and the disciplines. That's like going to the gym, not eating the biscuit when it's sitting there. The lovely biscuits behind there, I managed to stop myself, but, it is tough. But it is about keeping an organization fit and lean. And then you have what I'm going to a little bit about, quite a lot today, is the communication and the measurement and the KPIs of an organisation. And you could say that's the central nervous system that goes through to make sure that you're checking that things are happening and you're not touching something hot, or you are touching something that is nice or good. And if we can understand the corporation as a sort of equate it to a human being, then you can start to see that there are other parts of the corporation that we need to take account of, not just profitability and its desire to grow sales and other things. There are other areas that are important to it. And I think that I hope sets a little bit of the scene of the modern corporation and how it impacts. Many people talk about, that it's talent management, trying to get the good people in, and there are lots of other ways you can describe that. But I hope that sort of comes at it from a slightly different angle. So let's understand what is the part, also some of the other parts that are the drivers for this change of system that we need. Well, what about climate change? Okay, and this is taken off the internet, totally illegal, so I apologise for that. But I love this one where it says, yes, the planet got destroyed, but for a beautiful moment in time, we created a lot of value for shareholders, which is what we were there to do. And when we think of the history of time, that could well be where we end up. But no longer is that the Greenpeaces and those who are believers in climate change and other. Mark Carney, the governor of the Bank of England, and possibly more importantly in a global stage, he's also the chairman of the Financial Stability Board of the G20. And Mark Carney threw down a gauntlet about climate change. In fact, I was chairing a session, facilitating a session at the World Bank last year, almost exactly a year ago. The World Bank have an annual meeting of all the central bank governors. And there was a session much like this in Washington with that. And Mark Carney gave a surprising speech to me where he talked about what we were doing, integrated reporting, but he phrased it in the terms of climate change. And in fact, only on the 29th of September 2015, right, I don't know what the date is today, about the 12th or something, we're only a couple of weeks ago, Mark Carney chaired a session of the Financial Stability Board, and they had some guests around, and I was one of those. And it was really interesting in a speech he said in the evening. He said, the challenges currently posed by climate change pale in significance compared to what might come. Once climate change becomes a defining issue for financial stability, it may already be too late. And so let's understand that context. And again, quoting from others, I was very fortunate to be at the World Economic Forum in Davos back in January, and I was listening to a speech by the Colombian Minister of Finance. And his quote, this is my quote, I wrote it down as he said it, was that I'm no expert in climate change, but I am an expert in paying bills. And I am paying them every day for my country because of climate change. So let's not underestimate the impact that will have. And you'll see it in the news at the moment with COP21 in Paris coming up shortly. And in fact, the European Commission is very unhappy about the quality of what's likely to come out of COP21, but that's a different issue. So that whole area is really important. But the other part of the system change that we need is a lack of trust in business. Right? Easy to say, but very difficult to actually deal with. And the latest with Volkswagen and their findings, there was a really interesting piece of research done looking at the disclosure of carbon emissions by the different major motor companies. And what it found was that Volkswagen were the second worst in terms of their transparency and disclosure around carbon emissions of any of the major car companies across the world. Now, that may not be a reason why they were, effectively there was cheating going on, but nonetheless it is a signal. And there was also a similar signal with BP when they did an analysis of the disclosure of BP. They actually found that BP, just before the oil disaster, actually had spent less in the prior year on safety than any of the other major oil companies. Now, again, it isn't an indicator that there's going to be a disaster, but it is an indicator that something needs to change within those companies. And I hope that we will see those changes happening in the not too distant future. Now, so I talked about this idea of inclusive capitalism and the change that we need to see happening. And I'd like to pick up on another key change, or shift, as I like to call them. And that's around looking long term and not just short term. Or as Mark Carney described it, I thought beautifully, what he calls the tragedy of horizons. And I think I can only describe it as absolutely essential that we start to understand that business has traditionally had hindsight and oversight. Where is the foresight and the insight that we need to understand business? Do you know that if you took the 100 largest economic entities in the world, 44 of them would be companies? And if you went further, if you go into the largest 150, more than well over half are companies. So companies have this massive influence in financial stability, in sustainable development, in all of our lives, far more so than 20, 30, 40 years ago. We have a different environment that we need to coexist within. And short-termism is a problem that affects us all. In fact, Hillary Clinton in the presidential race that's so prevalent in the overtaking the US and everything they think about at the moment. Don't get me onto the US because it's a pet subject and it isn't nice. But she's constantly being talking about the tyranny of quarterly capitalism. And it is something that we have assumed. If you listen every morning, you wake up to money. I don't know if any of you wake up to money on a morning. It's not a pleasant thing. It's all about growth last quarter wasn't high in Tesco. Disaster. Yeah? Profit last quarter in Lidl was 2% up. Wonder of wonders. Well, actually, is it really wonder of wonders? You know, are we in a system that rewards short-termism and looking backwards, rather than rewards what these organisations are really trying to achieve, and how they're going to create value not just for today and yesterday, but into the future? And I think it's really important that we wage war on quarterly capitalism. And it's not just Hillary Clinton. You know, she's a clever lady. She's not going to do this on her own. But she's backed up by the likes of Larry Fink, who is the global managing director of BlackRock, the biggest fund manager in the world. And in fact, this concept of quarterly capitalism was coined by Dominic Barton. And Dominic Barton is the global CEO of McKinsey. And interestingly, Dominic Barton, along with the CEO of the Canadian Pension Fund, one of the major pension funds in the world, have created a whole resource and project which they call Financing Capital for the Long Term. And all of the research and thinking around long-term financing, they are putting together in their website and their drive to combat quarterly capitalism. Let me tell you a little story. I was actually in South Africa earlier this year, and I was leading a panel on integrated reporting. Surprise, surprise, it's my job. And the CEO of Goldfields, one of the big mining companies, was a panelist. And he was talking, and we asked a few questions. And he said, "I'm going to tell you a true story." And it went like this. Their biggest cost, and certainly their biggest risk, is labor relations in terms of the mining industry, not just in South Africa, but all around the world. And they opened a new mine in Peru. And what they did is he decided that we were not going to open this mine for 2 years. Because what we were going to do, we were going to train the indigenous people, create the infrastructure, and make sure that this was a mine that was built on a sound social footing. Okay, what he called a sound social footing. And so when they actually opened the mine and started to work it, the workers were actually the local people who were educated in what was needed. The infrastructure and everything was in place, which they had supported. And surprise, surprise, which is the most profitable mine in the whole of the Goldfields portfolio? That mine, and continues to be. And that is, to me, a story that tells not just about trying to create profit and extraction now, but actually looking forward to something a bit more. And in fact, going back to Andy Haldane, just thinking about this whole idea of the capital markets and how the investment system is challenged. Andy Haldane, actually, in a speech only 3 weeks ago, he had his team do some research. And in the UK, the percentage of profit that companies gave to their shareholders as dividends in 1975 was 10%, right? 10p in the pound. 2015, it was between 60 and 70p in the pound. Now, is that a sign that they're buying their shareholders in some way? It certainly is a sign that shareholders want big yields now rather than investing that profit back into the business, thinking long term. And the other interesting piece of research that came out of that speech that he did was the shareholder tenure. So again, I'm challenging the whole capital market system. The shareholder tenure in 1975, just after we started working, Peter, was 6 years. In 2015, it was 6 months. So are they really shareholders, or are they just share traders? And there's a whole stream of work that I see when I go around the world, in Japan, in India, in Singapore, in Brazil, in the Netherlands, started here in the UK, but spreading all over the world around stewardship codes. And the idea of stewardship codes is the investor, the asset owner, not the asset manager, not the person that's trading, but the asset owner says that I am going to own those shares as an owner, and therefore I want to understand the business model, understand how that business is going to be a viable business over a period of time. Now, the period of time might be 2 years, 5 years, 50 years. But, if you go to India and you talk to Ratan Tata and his dynasty there, it is about a legacy that they're building that business, not about short-term profit. The greatest example around is Paul Polman at Unilever, who actually says that if you are a short-term investor and want me to produce short-term profits, I don't want you. Go away. You can ask your questions, and he did this at the Unilever AGM, I think it was 18 months ago. One of the shareholders stood up and said, we're very disturbed about the profit. You could have had more profitability the last year, but you didn't. You've invested that in other things. We want short-term profit. And he actually, I wasn't there, but the article that I read said, "Sir, we don't want you as an investor. Goodbye." Now, that's very brave, and he's tried to get other major CEOs to say that, and they haven't, but we'll see if that sort of policy follows. Japan is the best example of stewardship codes at the moment, but we'll see what happens. And just to finish on that piece, I'd like to add, if you haven't read, there's a great book by Professor John Kay. Okay, John Kay is, if you know anything about pension regulation in the UK, about 10 years ago he basically rethought how the pension funds and things should be longer term. And in his book, he used this quote, and it was a quote from the then head of global structured products at the Royal Bank of Scotland, and it was in February 2004. And it said, this chap had said, "We are investment bankers. We don't care what happens in 5 years' time." Now, if you follow through 2004, what happened in 5 years' time was pretty poignant. And yet, we're still rewarding and still have a system that rewards that mentality, and we have to break it. It is happening. I'm not preaching to you as somebody that is a lone wolf. In fact, I'm telling you what I hear and see across the world. But in fact, the more times I use that quote, the angrier it makes me feel, and we need to rethink it. So, if I just move on again, I'd like to, if I can, go to the penultimate part of what I wanted to talk about, and the broken windows theory. I don't know if any of you are familiar with the broken windows theory, but I'm not an academic, so forgive me, those of you most of you who are in the room. But in my interpretation, what you're saying is if you fix something, if you fix a broken window the minute it has a crack, you actually are fixing a system, and it is noticeable to all those around the system that you fixed it, and therefore you won't allow other things to go wrong. Whereas if you break a window and you leave it broken, that then means that other windows will get broken. And in fact, what I found really interesting was that I was at the SEC in Washington not long ago, and they're actually using this broken windows theory and talk about it in terms of trying to correct their own system. And they're trying to create a discipline of behavioral economics that will be enhanced by the thoughts of the broken windows theory. And what I want to pose to you is that what we do with this integrated reporting, which I'm going to explain to you, is part of today's solution to the broken windows theory, which is what we have in our capital market system at the moment. So what do I mean by that? What is integrated reporting? Well, I talked about the lines of sight, but let me give you another quote, which I hope will give you a concept of what we're looking at in terms of communication and transparency. And that is Wayne Gretzky. Okay, any of you are sports fans? I'm afraid I'm a bit of a sports fanatic. He was and is the icon of ice hockey in Canada. So any of my generation, and again, I spend so many hours in aeroplanes, I read autobiographies by sports people, which is pretty sad, isn't it? That's not all I read, as you could tell, but there's a lovely quote from Wayne Gretzky's autobiography. I have to say it's a little bit of an arrogance, but anyway. But one of the key quotes he says is, "I skate to where the puck is going to be, not where it has been." And I think that encapsulates quite a lot of what I've been saying today. So what is integrated reporting? Integrated reporting is about explaining in clear and concise language what is the business model of the organization and how it will create value both today, tomorrow, and in the future. Articulate how that business is going to create value. And I'm purposely using the term creating value and not profit, right? Now, to me, profit is an element of value. If you go back to some of the things I was talking about before, profit is only an indicator of value. If you look at the likes of Amazon and Google and Facebook and many others, their value, even at stock market level, is nowhere near what their profitability shows. I was very fortunate. I sold my software business right at the end of 1999. And it was a great time to sell. And of course, hindsight's a great thing. I wasn't very clever. I was just lucky. But at that time, if you looked at my balance sheet and my financial statements, you know, there is no way that the value of that was encapsulated in the price that I got for the business. And that, we all know that. When you buy businesses, you look at multiples of EBITDA and you look at other things. You value businesses in different ways. So why don't we report? Why aren't we transparent about it? 48%, according to Interbrand, which is the major brand consultancy in the world, 48% of the value that is created by Coca-Cola is because of its brand. Do we ever see how is Coca-Cola managing and maximizing its brand value? No, we don't. It's not in the corporate reporting. It's not in how an investor or those that are associated with the business, the employees, the customers, the suppliers, the society that exists around it, it's not what they understand about the business. Last week, in fact, I only came back last night from Turkey because I was there for some of the discussions around the G20, of which they have the presidency. But one of the people on a panel I was at was the Coca-Cola bottling company, which is a major company based in Turkey. And he was saying how they took some of the things we were talking about and they now start to communicate how they are managing the brand in places like Iran and in Pakistan and in Turkey and other places that they are the main bottling distributor for. So it is about this value creation, which is more than the financials. And integrated reporting talks about 6 sources of value in an organization. So one is financial, that we're all used to, and let's not get away from it. You know, that's absolutely fundamental. The second, which will be close to the financials, is what we call manufactured. But if you think about distribution channels, Itaú Unibanco is the biggest bank in Brazil, biggest bank in, I think, in South America. They invested hugely in a digital infrastructure to get away from their branch network into the future. That is an infrastructure of the business. That investment is only shown in terms of cost. It isn't shown in terms of opportunity that is going to develop in their value creation. And they show that now in their integrated report. So that's number 2. The third one is what I'm dear to me in the software world, which is intellectual. So that's intellectual property, brand, all of those sorts of things that matter more to some businesses than to others. If you think about the University of Bolton, how much of the value in a different sense, but how much of the value of the university is built around its brand and its intellectual capital that is contained within the organization, its research and its academic rigor. Then we move on to the ones that you're probably more, that are often associated with sustainability. So natural capital, you know, environmental capital affects probably more the extraction businesses and those sorts of things, and social capital, which we've talked about, the people, the relationships, and that sort of thing. How you're impacting the communities. And it's not just, this isn't CSR, this isn't corporate social responsibility, this isn't philanthropy. This is, if you do philanthropy, for example, how does that impact the business? Now, I'm not saying you shouldn't be philanthropic as a business, but don't confuse that with the business model and how you create value. Okay? Be philanthropic, be socially responsible, but also understand what and how your impact, like with Goldfields, in the company, the fact that they had invested significantly in the social infrastructure of that small village in Peru meant that they created lots of value. Right? We can be hard and say it's only about money, but I don't think that's correct. And then the final one, which is the term I hate, which is human capital, which is you and me, and the staff and others. But nonetheless, you know, let's not underestimate the value of capital. One of the things I do when I look, when I chair companies and in my own company, is I look at churn rate. In other words, certainly in the software world, the longer people stay with you, the more profitable you are. So why do you invest in training and and social programs? Yes, you do have, you do want your staff to be happy, but also you do it because it makes you more profitable. So you watch churn rate. Churn rate was right there on my balanced scorecard when I was running my business. Because, if there are 700-800 people and you suddenly see it go from 3% to 5%, that's going to hit my bottom line. It may also be that we've got a rotten culture, but it will also affect the business's value in the long term. So those are what we call the 6 capitals. Different organizations interpret that and report on it in different ways. But let me reiterate, the phrase I use is that it's a concise communication about value over time. And if I can pick up on the word concise, do you know that the number of words in the GE annual report, right, big American company, was over 100,000 words? Now, I didn't count it. Fortunately, there is a word count in the software. If you look at any of the Harry Potter books, none of them are more than 60,000 words. So, and the Harry Potter book you can hopefully read and understand and have some enjoyment of. I mean, as an accountant, reading the GE report, never mind not being able to stay awake that long, but it is just nonsense, most of it. It's just incomprehensible compliance gibberish. And, we've got to get past some of that. And I'm picking on GE. I could pick on another one. 257 pages of nonsense in their report. So I like to think about what we're talking about. Let's think about cookery, right? So the Great British Bake Off was a week or so ago. And the Great British Bake Off brought to mind the metaphor of cookery, because reports are, if you like the cooking books. The capitals I talked about are the ingredients that you have. The connectivity of how you put the ingredients with the book is the recipes that are contained within the book. But the value creation is not just the final dish, but what makes that final dish really succulent and something that you want to have. So I hope that gives you a clue as to where we are with integrated reporting. And let me come, if I can, to some sort of conclusion with you. Because earlier on, I quoted the investment banker, and I hope that it neatly summed up a attitude of my generation, which I hate to say. But I'd like to quote another American, and he has to be American, called Warren B. Bennis. And Warren B. Bennis is an American professor of leadership and advisor, actually, to 4 US presidents. And he said, and I'd like you all to part of the dream change I'd like you to think about, he said that leaders keep their eyes on the horizon, not just on the bottom line. And I think we need to think hard and long about that. But I believe passionately that different cultures should learn from each other, because I've been very global in what I've talked about, as a generic sense. And if there's one clear lesson about today's world, is that there is no society or no practice that has a monopoly over wisdom. And I see the world through the eyes of business. Many see it through others. But I see a world that is unsustainable, not only unsustainable, but actually one that will be destroyed. And you can agree or disagree with me about that. I was in Turkey yesterday. Unusual weather they got in Turkey. I was in Dubai the week before. It's really hot in Dubai for this time of year at the moment. right? I was in Singapore 2-3 weeks ago. You see, I spend a lot of time in the air. And there's a haze all the time. Now, we know why that is the case. You know, we have unusual weather conditions all around the world. Let's not assume that things are the same. We have to change. We have to look at system change, not just because of climate change, but because we've got a rotten system that isn't a system that is fit for purpose into the future. And certainly, I am a long way, other than great conversations with Mohammed, from being an expert in Islamic finance. And that's why I'm seeking the support of the centre to raise awareness about these issues, and specifically about one of the tools to combat them with integrated reporting in the Islamic world, to embed these universally relevant principles of value creation within businesses, and get support from governments, from exchanges, and from others. And I'd like this lecture today, I hope, to ask the centre to work more closely with the International Integrated Reporting Committee to make these connections and to create adoption of integrated reporting that can be truly global. Ladies and gentlemen, thank you very much for listening to me, and I hope that I've given you some insights, and that you can walk away from today with thinking that maybe your dreams can be changed. Thank you very much. Thank you.
Well, ladies and gentlemen, Paul has agreed to take some Q&A. So if you have any questions, please feel free to ask. And kindly just mention your affiliation and your name, of course. I have a question.
Yeah.
And
No, too shy.
no, not at all. How successful you have been in convincing some of those heads of banks of what the message you are passing?
Well, I mean, we've counted well over 1,000 integrated reports out there of different qualities across the world. And when you think about the framework was only released less than 2 years ago, it's a huge impact. But specifically in the banking world, some of the major banks across the world are starting to think about that. They have an issue with trust, banks, and they're trying to think very carefully about how can they build trust. They're not succeeding very well, but they're starting to work. So I use the example of Itaú Unibanco. If you go to DBS, which is the biggest bank in Southeast Asia, they're another one that does a really informative and useful integrated report. Companies like HSBC, and I know you may not believe this, but are starting on the journey. You will see they're the National Bank of Australia, etc. So the banks are starting to understand. The problem that we have in the reporting world is reporting fatigue. So they've got Sarbanes-Oxley, and they've got this, and they've got that, and there's the Enhanced Disclosure Task Force, which is more disclosure for banks than for others, etc. And so what's happening is the tick box culture of compliance has overtaken the communication of value creation. And so the banks see this as an opportunity to do that. They're not a hard sell, the banks, but it depends who you talk to. If you talk to the financial reporting community, it's, do we have to? Because they're not seeing the opportunity to explain their story.
Excellent. Please.
I'm going to be really greedy, if you don't mind, and ask 2 questions. My first question is, can everybody hear me without a microphone? I know it is. I'm going to be greedy, as I said, and ask 2 questions. My first is, you said that you'd just been to the G20, so I wondered what is the view of governments, of leading governments on this? And how did the IIRC start?
Okay, right. Well, the G20 is interesting because with Turkey taking over the G20, they were focused on implementation. G20 is losing its reputation as anything more than a talking shop in terms of implementing initiatives that come to it. And Turkey was very focused on implementation. And one of the key things that they've brought about, their initiative, is something called the World SME Forum. So they will create in 2 weeks' time at the summit. They will create the World SME Forum. And in the forum, in the recommendations of the World SME Forum, it actually talks and says that SMEs need to explain to providers of financial capital and others a better way of articulating their value creation, and that the best thing that is around is integrated reporting. So that comes through. In fact, the Australian G20, their main outcome was something called the Global Infrastructure Hub. So they talked about